Welcome back. We are now hearing a massive drawdown in liquid staking derivatives on the Ethereum ecosystem as a conversation has now begun whether Cardano actually has liquid staking, the same as what we see within the Ethereum ecosystems with liquid staking derivatives and liquid staking tokens. We're going to be discussing that among many other topics, including Internet Computer is now fusing to the Bitcoin blockchain. Stronghold Bitcoin, their stock has now crashed as the company is looking to raise millions, hundreds of millions of dollars, and Solana is going to be airdropping 10 million coins to their ecosystem, and we're going to be discussing all of that in today's video. Make sure you guys are subscribed to the channel. We upload every single day of the year since 2018 to bring you the latest happening in the financial world. Also, give the video a free thumbs up. It's free to do. It costs you $0, and it lets me know you guys enjoy this kind of content. Let's get right into it. We're going to be starting right here with Internet Computer and Dfinity and Dominic, basically talking about chain fusion, CK Bitcoin, which is chain key or chain fusion technology, scales Bitcoin without any intermediaries via chain fusion technology. With near instant transaction finality and low cost, users can transfer Bitcoin seamlessly to and from the Internet Computer blockchain. Several dApps on ICP like My Lugano are already driving Bitcoin adoption with CK Bitcoin payments. Now, just recently, the Dfinity Foundation has kind of rebranded chain key technology into chain fusion technology. And the reason they did this, I believe some of this has to do with kind of just being a little bit, it making a little bit more sense to the everyday person, right? I mean, if you hear chain key technology, you're like, okay, what the hell does that have to do with? You know, a chain and a key? I don't get it. If you talk about chain fusion, this is really understanding that the blockchain is getting fused together. Internet Computer is fusing to the Bitcoin blockchain, to the Ethereum blockchain, to all of the other ecosystems in DeFi and AI and compute and all of that. And by the way, I've heard you guys, a lot of people are saying Cryptoviser, Internet Computer is not the only AI platform. What about Render? Well, Render, I wouldn't say necessarily is a AI platform. I would say it's more of a compute platform, and I'm going to be doing a separate video specifically under the Render protocol because it is a very interesting ecosystem, and from a kind of valuation perspective, it's also quite the coin to look at. So we're going to be talking about that in future videos. So make sure you guys are subscribed. That way you never miss those videos. And by the way, if there's any other kind of content you want to see on this channel, let me know down below. And I will definitely look into some of the topics for future videos. So anyway, before we get into well, I guess we should talk about chain fusion first, but basically ICP, Internet Computer Protocol, enables direct interoperability with all major blockchains, including Bitcoin, Ethereum, and other Ethereum virtual machines or EVMs, and soon Solana, without relying on any trusted intermediary. Unique compared to other blockchains, Internet Computer smart contracts can read from and write to different chains, enabling developers to write smart contracts spanning different chains. This is chain fusion. And by the way, chain fusion is effectively just another name for interoperability, right? It allows Internet Computer to connect across the ecosystem of dApps, of different coding languages, of different tokenomics and metrics, of different ecosystems of developers, and bring it all together. And yeah, so let's listen to Dominic, who is the founder of Dfinity, which is the company behind Internet Computer Protocol. This was at the Web Summit in Qatar. I'm not sure the exact date range of this, but this was posted to X in April of 2024. Let's listen and watch Dominic.
The Internet Computer has adopted a new technology called chain key, and recently that was used to create something called chain key Bitcoin, which is a Bitcoin twin. So using the Internet Computer as an alternative layer 2 to accelerate Bitcoin and make it less expensive. And now you can transfer Bitcoin with about 1.5 second finality and near negligible cost, like thousandths of a cent. And we already have that actually working in Lugano. You can actually pay with chain key Bitcoin alongside, you know, fiat. But with what we saw just before Christmas was this huge surge in chain key Bitcoin transactions, actually in China, but we're expecting to see a surge in South America and Africa.
And by the way, I think this is from at least a year ago, maybe 2023 or 2022, because he's still referring to it as chain key technology. And like I said, they rebranded to Chain Fusion. I also think another part of the reason behind the rebrand to Chain Fusion was the fact that just recently in 2024, the Near protocol actually implemented chain key technology to their blockchain and gave no credit to Internet Computer for inventing and being the first to implement this technology on chain. They just kind of took the technology and said, look at what we're doing, it's revolutionary, when Internet Computer already had that. But either way, I mean, it really does show that clearly chain key technology is the future of interoperability, to be able to read and write from different blockchains, right? One of the reasons that this channel has recently dropped Cardano coverage is because after 7 years or 6 years or whatever it is, since the blockchain launched and being promised interoperability over and over and over, the ecosystem still has zero interoperability at a very basic level. To the likes that new blockchains that just launched, including Internet Computer, including Solana, including Toncoin. I mean, all of these have interoperability, right? Cardano has no interoperability. And, well, people will probably say Cryptoviser, Toncoin has no interoperability. Okay. Anyway, you guys kind of get the point. Interoperability is key. And in my view, so is ICP. And so I am so bullish on ICP. I am trading it. I am currently, when I'm recording this video, I am not holding any. I took profits. I mean, keep in mind, we were up almost 10x from the lows of $2.90, almost to $22. And so, you know, we talk about investing and, you know, not necessarily calling the market, but we follow the market every single day on this channel, right? Keep in mind, my videos are delayed. So you have to do your own research, understand the risks involved, make your own investment decisions. Nothing I say is financial advice. And, you know, sometimes my videos are delayed by a week. So by the time you're seeing it, it's already outdated in terms of the pricing stuff. And I do this on purpose because I don't want my viewers making decisions based on one video, right? You guys need to make decisions on your own research, on your own kind of thesis and understanding of where the markets are. And personally, I believe that we are going to have a pullback at or around the Bitcoin halving. I thought it was going to happen before, but it's clearly going after. I think until the Federal Reserve announces rate cuts, we are not going higher in the markets. They're going to do it, and I think they're going to do it sooner than later, but until they announce it, we're not in the clear. We're going to have more downside, more volatility. I believe this is going to happen. I could be wrong. Like I say, I could be wrong. And I'm in the market in some areas. I'm out of the market in other areas. That way I can look for better opportunities, right? And so, yeah, I did take profits out of Internet Computer. I think I'm going to buy a lot more when we go much lower, right? And, you know, that's right. What's right for my portfolio. For your portfolio, maybe it's holding longer. Maybe it's trading on a daily basis. I don't know. Let me know down below. Anyway, in another trade that I don't know whether I made a good buy or a bad buy here, but Stronghold Digital Mining eyes a $250 million offering as their CEO is selling shares. Now, I'm not so worried about the CEO selling shares. From my understanding, this is to cover tax obligations from his equity-based compensation. So he's selling some of the stock to cover his taxes, which is part of the way that he gets paid. Because a lot of executives, keep in mind, they get paid in stock offerings, not necessarily in just straight cash. So I'm not as worried about that. But this $250 million offering, this effectively means that they're going to be offering $250 million in stock. And what that basically does is that dilutes the stock price of every other. It's kind of like printing money or adding coins and inflating the coin. But the thing is, Stronghold, this company, this Bitcoin mining company, is only $26 million market cap. So they're going to be taking out $250 million. Effectively, it's debt. I mean, it's not really debt, but it kind of is. But they're going to be offering and they're going to be diluting every share to the tune of $250 million. Now, this is if they even get that. I don't know that they will, but they probably will. I mean, it's 10% of their market 10x their market cap, what they're raising. But I would imagine that they're raising the money so that they can expand their operations. Because if we look at the Stronghold Bitcoin mining, and the reason I'm talking about this, guys, is because this is what I consider a mega microcap stock, right? It's under $100 million. Very rare do you see companies that have potential in the under $100 million range. And when they do, I kind of look a little bit deeper into it. But if we look at what they're producing, Stronghold mined 179 Bitcoin in March and generated basically $100,000 of energy revenue, the equivalent of one additional Bitcoin based on the average price of Bitcoin during the month. Stronghold generated an estimated 11.1 million in revenue during March. So if you just annualize that, right? If we take 11.1 and we multiply that by 12, it's $133 million in revenue. Keep that in mind, in revenue. Their profit, I don't know, it doesn't show. But I would imagine it's probably maybe half of that, right? So $60 million. That alone is still 3 times or 2.5 times their current market cap. It'll actually show us. Yeah, they're in the red every year. They made 75 million last year and they lost 71 million. So they're running double what they're making, basically for 2 years straight. Will this change during a bull market? It's possible. But this $250 million offering, most people would get very concerned about that. And this is why the price has basically gone down from about $4, $5 in the last month. Yeah, you can see about $4.30 in the middle of March. If we pull this back to December, $11, and now it's at $2. I think a lot of the concern is that they're taking out $250 million, right? And so Stronghold posted this on their X page. They said, we would like to clarify that the recent S3 filing with the SEC, they've not entered into an at-the-market program, meaning offering these shares, and have not used their existing at-the-market program in 2024. This was a universal shelf, which is subject to review by the SEC, that may allow Stronghold to issue up to $250 million over a 3-year period once that is effective. So what I'm reading it as is Stronghold is saying that they did file this with the SEC. They filed it as what they call a universal shelf. I'm guessing that means that they're just getting the approval so that if they need the money and if they see a good opportunity, they can do it, right? Because keep in mind, we've already seen stories from the big Bitcoin mining companies. I think it was Riot Platforms or Marathon that basically said that they were waiting to see small Bitcoin mining operations going bust after the Bitcoin halving when the price doesn't immediately adjust up. And so some of these Bitcoin mining companies, it's not going to be profitable to mine anymore, and they're not going to be able to continue to mine when it's not. So these other companies are going to go in and buy up their stuff. This could be what they're creating this offering for. That way, if they see a good opportunity that can help them grow, that they can go make the offering, get the money, and then make the purchase in a very short period of time, since they're like pre-approved for it. And they're basically saying that this $250 million could be issued up to a 3-year period. That's also, it's not all being done all at once, right? And a 3-year period is going through the bull market. And doing it through a bull market is potentially, the market will be able to absorb the extra shares that are being issued because there's more interest, there's more money flowing, and the money velocity is much higher. So there's a possibility there. I'm kind of showing you guys this because this is a potential, in my view, for essentially life-changing gains. I mean, if Stronghold does well and it gets up to $500 million, that's basically 20x, right? 25 times 20, I think, is 50. 25 times 20, yeah, 500 billion. So I mean, that's huge. 20x from here would be $40. And people who say, well, Cryptoviser, that can't happen. I mean, in 2021, this stock, and again, I don't know where the stock was, I don't know what the market cap was, but the price of the stock was $272, literally at the peak of the Bitcoin market. So that's kind of my thought on that. This user on X basically also posted this. They said there's a 22-acre lot that comprises a parcel that contains the potential Stronghold mine waste to energy facility in their acquisition target. Similar to Panther Creek, this land is owned by a third party and presumably leased by Olympus. That's a company I guess they're working with. In the case of Panther Creek, Stronghold Mining ultimately cut a deal to acquire the land from a third party that owned it. That may also prove to be the case here too. Several of the adjacent vacant parcels are owned by the same third party. Room for some expansion? Just the main 22-acre parcel that comprises the area depicted in red would arguably be adequate for the creatively shaped build out of a Bitcoin data center, but it seems tight at some level as well. And so obviously Stronghold is looking to build and grow rapidly. And during a super bull cycle, there's potentially going to be a lot of money flowing in. And if you do a little bit more research into a lot of these Bitcoin mining companies and you look at institutional holdings of these stocks, most of the Bitcoin miners, if not all of them, that are publicly trading on the stock market are owned by large hedge funds, State Street, BlackRock, Susquehanna, Invesco. And so the fact that they're backed by these large funds means that they're probably going to get more funding and continue to grow and continue to expand. And this is an exciting arena and area to be in at potentially all-time record low prices. Now, again, there is risk involved here, a lot of risk. But if you believe that Bitcoin mining is going to go up, you believe Stronghold can kind of get through, and you believe that them trying to raise money is to expand and grow their operations, and you think that they're going to be able to do this in a successful way and get into the likes of Marathon Digital, Riot Platforms, Hut 8 Mining in the multi-billion-dollar market cap, we're at 40x to $1 billion. Right, a 40x. That would bring the price to about an $80 price. $1,000 would turn into $40,000. $10,000 would turn into $400,000. So I'm not saying it's going to happen, but it could. And we're probably not going to see these prices this low, too much lower or longer past the Bitcoin halving. Because if you do actual chart analysis of the Bitcoin and Bitcoin mining companies, which we did on previous videos on this channel, the Bitcoin mining companies after the halving, generally speaking, just go straight up. There's no corrective phase after the Bitcoin halving. And so we'll see kind of how this plays out. I'm excited about it. Are you? Let me know down below in the comments, and don't forget to give this video a free thumbs up. Next up, liquid staking in Ethereum. Now, there's this big conversation about what liquid staking is and whether Cardano has liquid staking or not. Well, liquid staking derivatives lose ground with over 380,000 Ethereum withdrawn in April alone. Now, this is following a significant downturn in March. Liquid staking derivative protocols experienced another withdrawal of 380,000 Ether, or $1.1 billion in April. Why is this happening? Well, April 1, these platforms collectively held 13.5 million Ethereum across 27 DeFi platforms. Presently, according to this article, after the decline, approximately 13.15 million ETH, valued at 41.5 billion based on current exchange rates, remain. Now, keep in mind, this is still a huge amount. I mean, $41 billion. When I'm recording this, it's about $40.5 billion. Most of this is in Lido with 9.39 million Ethereum, followed by Rocket Pool with 1.13 million Ethereum and Binance 896 million Ethereum. So a pretty big gap from the largest to the second largest, right? It's an 8 million Ethereum gap, or almost a $25 billion gap between Lido and the second largest protocol there. And so why is this going on? Well, I mean, I don't really know. As the Ether exodus from LSD persists, uncertainty clouds the future of these liquid staking derivative DeFi platforms. Now, keep in mind, 720,000 Ethereum were removed since March. And so they're saying this is a shifting sentiment among investors. I don't necessarily agree with that. I just think it's a reset, right? There's still $40 billion in Ethereum and they're freaking out. They're like, oh no, this is decreased. This is more than double pretty much all of crypto combined. I mean, for real, this is ridiculous that people are saying, oh, LSD, liquid staking derivatives, are done in Ethereum. That is clearly not true. It's not even close to true. And so, has there been a decrease? Yes. Will there continue to be a decrease? Probably, because there's going to be other things that come along, or other staking, or people just don't want to stake, or people want, guys, keep in mind, when we are rotating in these markets and we're seeing a massive volatility, which we have been seeing in March and April, and probably May and June we'll see as well. When you see this volatility, people want their coins liquid, meaning in their wallets, ready to go. And they are probably selling and holding and waiting and being ready to make any move that they need to do. The fact that we are seeing so much stocks being sold in the stock market, and we have all of these smart traders that are taking profits off the table, as we have done for the last 6 months. I've been telling my viewers, don't forget to take profits, because otherwise you're going to leave this bull market with nothing. We don't know how long the bull market's going to go. These theories and thesis that we have on these markets, and the chartists saying, oh, this is going to happen this day and this is going to happen this day. Guys, even when we try to predict where the prices are going, we don't know. And we don't know the timing of it. We're pretty good at timing the market in the market, right? Not necessarily ahead of time, because you have to really look at all of the metrics in the market. You have to look at the dollar index. You have to look at the 10-year yield. You have to look at what the Federal Reserve is doing. You have to look at global markets, look at stock markets, look at the Dow Jones, the S&P, understand what's being removed, what's being added, where the money flows are coming. Like, there's so many things to analyze. And we could still be wrong, but we're pretty accurate on this channel with calling tops and calling bottoms of the market. Because you're not going to know whether it's top or bottom until after. And you're also not going to know when you're in a bear market until you're in the bear market. You're not going to know you're in a bull market until you're in the bull market. And so we don't know where these prices are going. But during these market rotations, when there's volatility, yeah, people are pulling their coins out of staking. They're pulling their coins out of liquid staking because they want their coins available, and they're probably selling their coins. And the people they're selling it to are probably traders who are not going to stake it. They're just going to hold it, and they're going to keep trading it. And so those coins may never re-enter the liquid staking derivative ecosystem. But it doesn't matter, because there's still $40 billion in there. And with that, liquid staking protocol Puffer raises $18 million, led by some big financial firms and electric capital. So liquid staking protocol Puffer raised $18 million in a Series A round. This was led by all of these: Fidelity, Coinbase Ventures, Kraken Ventures. This round will be used to help launch Puffer's mainnet. Prior to this, Puffer raised $5.5 million in a funding round. Puffer is the second largest liquid staking derivative behind EtherFi, and is the part of a class of protocols that have come out of the growing restaking field that has taken Ethereum ecosystem by storm. EigenLayer, a restaking pioneer that launched this previous week, has attracted some $12.7 billion of user deposits that became the second largest DeFi protocol, according to DeFi Llama. And so you have liquid staking restaking works by taking deposits and putting them into the EigenLayer, which lets Ethereum stakers earn yield for using their ETH tokens to help secure the third-party platform, known as actively validated services. Puffer is an actively validated service on the EigenLayer. Puffer then hands out their token, Puff ETH, to the users, representing their deposit, allowing them to take that token for trading or for other purposes. So this is liquid staking, and then they also have liquid restaking. I don't fully understand the difference between liquid staking and liquid restaking at this point, but maybe there is no difference. I mean, it seems like the same thing. And then the LSD, or liquid staking derivative. The derivative is that coin that they issue you to then go and use within the crypto ecosystem. And so you're earning yield potentially multiple different ways. I mean, I don't know. I don't necessarily know what they're raising money for, how that's going to work. Maybe they're doing it for more secure platform and custody. I don't know. EtherFi, the largest, inked a $500 million restaking deal with Redstone Oracles. They're going to dedicate $500 million to help secure Redstone data oracles, which are used to pass information between blockchains and the outside world. And you know what's crazy is this is everything Ethereum is doing, right? And they have billions and billions, triple the market cap of all of Cardano just in their liquid staking. I mean, Cardano's market cap when I'm recording this video is $15 billion. So 3 times that is 45 billion. So basically, there's 3 times as much market cap of Cardano in restaking. And Cardano has no availability to interoperate with other protocols. It also doesn't have any oracles. We just did a video on this the other day. And even though we did a video which showed that one of the lead engineers in the Cardano ecosystem is saying that there's no Cardano oracles, people were still in the comments saying, but Cryptoviser, that we have oracles. I'm like, that community is literally tone deaf. Like they're totally just deaf to any criticism, any critiques. They're like, no, but Cryptoviser, we have that. And it's like one of your top engineers is saying there's no oracles in Cardano, and you're still saying there's oracles in Cardano. Anyway, it's going to be really interesting to see how Cardano performs this cycle, but we're not holding any of it and probably won't be. Anyway, Solana DEX called Drift is set to airdrop 100 million tokens to users. And so Drift, a Solana-based DEX protocol, is set to launch a token and airdrop 100 million of their Drift tokens to users. And so how is this going to happen? Well, they said they're going to have a total supply of 1 billion Drift tokens. 10% or 100 million will be distributed through an airdrop. The 100 million will be airdropped to 180,000 of Drift's users based on their activity on the platform. And this is fairly common what we see in these newer airdrops. It's not just airdropping if you hold the coin, it's airdrop if you participated in the ecosystem, either sent us one of the coins last year or the year before, if you depending on how many transfers you did with your coin or how much trading you did, determine how much you would get. They said token generation event and airdrop claim date will be announced at a later date. Drift has taken multiple snapshots over the past 3 years and has done comprehensive activity analysis for this token airdrop. So as you guys see, a lot is going on in crypto. There's a lot of ways to make money in this cycle. But what I will say is the biggest barrier is buying and the biggest barrier is selling. And so most people, they'll just keep waiting and waiting and waiting and waiting and waiting for the bottom. And you don't know it's the bottom of the market until it's no longer the bottom of the market. And so what I do is I try to look for the yearly lows, the multi-year lows, see how close are we to those? What is the development in the company? Like what is going to make the valuation of the company go higher? And if those line up and are all green in my analysis, these are buys. It doesn't matter if we're at the all-time record low or we're close to it. If I believe the trajectory is higher, yes, I could make a little bit more by waiting. But if I keep waiting, I may miss it. And the same thing goes on the selling side. A lot of people get greedy. And as I was explaining, even if you just looked at the greed and fear index on CoinMarketCap, right? This is CoinMarketCap's own calculations, but we were able to kind of validate their index based on what our analysis is of the overall market. And when this was at extreme greed, I told my viewers, guys, this is probably the time you want to start selling. Because when everyone's like, no, you can't sell, you got to hold forever. Believe there are people selling, and a lot of people selling. And now the market's dropped a little bit, and guess what? Extreme greed went away because people started to pull back on that narrative. When it starts going up again, maybe pull some profits. When it goes to extreme fear, that's when you buy. I think it's Warren Buffett says, when others are fearful, you get greedy, and when others are greedy, you get fearful. So you have to be opposite where the market is. But most people will leave the bull market with nothing, or actually with negative, because they're going to overtrade, they're going to get overconfident, and they're going to forget that the market works in cycles. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. And I'd love to hear what you guys think down below in the comments of this video. I'll see you guys tomorrow. Crypto on.